What's up, everybody? Back with another market recap. Today we're gonna go over S&P 500, Nasdaq, gold, and oil futures. First, we'll start off with ES, S&P 500. Potential trade setups could have took earlier. If you would have seen this break a structure here, push to the upside, came back, made a new higher low. At the same time, we have a double bottom here, right at market open. This candle right here, 9 o'clock candle, we'll break it down. So if we would have did our favorite entry setup, which would be the breakout of the 15-minute of the orb, let's set this up here. See, this is the 15-minute candle. As soon as it broke that high, long positions to the upside. Beautiful 100 points. Would have had zero drawdown. Straight into profit. Next 15-minute candle by 10 a.m. In and out of the trade. You could have reached for these previous highs here. This would have been a really nice trade setup right here. Retest these levels. The market continued to go up, but you did see it reacted right when it hit that level. Got to pull back. People were closing their positions here. That's what the pullback's for, and then continue the bull trend. Ultimately, we ended up pulling back down into the same zone that we started off the day in. So what could that mean for tomorrow? Let's go to a higher time frame and see. I'm also going to do a video, maybe not today, maybe tomorrow we'll do a video on support and resistance, just a real simplify support and resistance. But you see here we had a 4-hour bearish engulfing candle break back below this level. So basically it means we tried to push up and the bears took control, so we're stuck back in the zone. So these longs are not valid right as of yet. We'd have to get a clean break above this level now, because this level was already rejected multiple times. Once you have a rejection break above, if it was valid on buys, it would come back, retest, and continue to go up. But since we closed back below and even retest these levels here, we'd have to see how the market reacts. Might come back up to here and reject, continue the shorts. So right now we're going to play it by eye. We're stuck back in the zone. What we could do is just wait and break out of this zone, and then take our clear position either to the downside or to the upside once this market shows its true direction. We'll zoom out a little bit. How does the daily candle look? Daily candle did close bullish, but it's a large rejection to the upside. So the bears are still in control. We'd have to get a more of a solid bull candle to say, all right, maybe we caught bottoms here, start going back up potentially. All right, so let's clear this chart off. We'll start fresh. Let's clear off the NQ chart too. We'll start off fresh. We'll do a fresh chart up on this. We'll start on the 4-hour chart, draw some key levels, support and resistance. I like to go off psychological levels too, like round numbers. Nasdaq really likes round numbers. At round numbers, what I mean is like right here is 18,500 to the T. $18,500 to the T. Look at by a point. See how many times it reacts off this key level? It's a psychological number, a round number. So when institutions are making their orders, it's easier for them to say, oh, get out at 18,500 instead of get out at 18,518 or get out at 18,754. It's easier to just say get out at 18,500 or get out at 20,000 or get out at 17,500, 17,500 or 18 round. So you could almost go off support. If you have a support and resistance area and it has a psychological level, that number's gonna be a very strong number. We got 1800 here. Valid. See what this is around here. Look at 17,500. I just seen it now. You guys seen it live right there. Look, psychological number. Could do up here 19,000. 19,000. All right, now we've seen that on the 4-hour chart. What we have here, almost the same setup at 9 o'clock. We had a double bottom, break of the highs, continue to go up. See how we could have took this trade on the orb? Look at that. As soon as it broke the high, we had a little bit of a retest of that area. That's even a better entry. Continue to go up. Boom. Beautiful 2-to-1 R&R. 2.5-to-1 R&R. It's a nice trade right there. Another nice trade could have took using that same style of trading that I talked about multiple times. It's simplifying the trading and having a systematic approach that keep you profitable. At the end of the day, it's a long-term numbers game. So you're gonna win some, you're gonna lose some, but the majority you win at a high R&R, you're gonna be profitable at the end of the month. You got to take those L's as a lesson and don't be greedy, don't overtrade, and you'll be successful. All right, let's go over gold. Remember I said we'll come back up to this level, take the entry and short. Look at what it did. We missed it by a point, maybe 2 points, but this would have been the entry, and then completely just dump into, we'd be in profit right now, still running. We missed our entry here, so we weren't able to take that entry, but this gets frustrating. This is where trading gets frustrating because we had marked this out. We planned the pullback to this area. It almost hit the entry to the T, missed it by just a few points, and then continued to dump it to our favor. I'm really, really good with my entries with gold. And at the same time, you could have also took another trade once we broke below. Remember I was talking about breaking below the 2450? Same psychological round number, same thing. Broke back below straight to 24.25, and I said that in the video the other day. If we broke below here, we're going to go straight to 24.25. That's 250 pip move. That's a huge move. If you have a standard standard lot, that'd be $2,500. 10 lots, $25,000 in a day. On this trade from here, literally from here to here, with basically no down draw. That's a nice trade. That's a nice trade. We talked about that setup yesterday. All right, we'll go over. Oil's still on the downtrend. And remember, this was a really nice move here. We talked about last week coming up to this area and then rejecting and dumping, and we jumped right back into the downtrend. I even had it marked off on the fib. When it broke the 61.8, we were talking about going to this next level here. Look at how accurate the levels are that we marked off. Almost every time it's a reaction. And if you do 78.50 instead of 78.48, it'll be even more to the T. Look at that. Round numbers right here. 75.50, same thing. This one we don't ever really go over, but this is the Japanese stock market that completely plummeted. It was all over the news and everything like that because the market dropped 20%. So I just put it on there so we could keep an eye on it, because the market starts panicking like that. It's a global market. It could affect the United States and affect some of the markets that we watch, S&P 500, the NASDAQ, stuff like that. All the tech stocks took a big dump, but they're starting to rebound a little bit. We just got to keep an eye on it, see if we actually reach a bottom, and then continue to long it back up. But for now, we're going to keep an eye on it. We have the trade set up for tomorrow. We'll see how it reacts around these levels. Keep an eye on ES. Really like ES. Let's mark this up real quick while we're here. I erase those. Mark up ES real quick. ES is not as accurate with the round numbers like NASDAQ is. Yeah, what we want to do is see it break out of this range. Either out of here or out of here. Then we'll get a true sense of direction, because it's been stuck in this range, this area for 2 days. Yeah, we want to break out of here, get a clear sense of direction, should start showing where it wants to go by the end of the week, and then we'll continue the trend from there. All right, everybody, we'll check back in tomorrow. Good luck trading.